Hello and welcome to My Finance Teacher. Today is 29th of April 2018 and I hope everybody is having a nice weekend. And today we're going to talk about gold as well as the miners. You see the chart of the miners in front of you at the moment. But the first thing I want to start from is the chart of the US dollar. That is the interesting chart that might give us a clue on where gold and the miners might be going over the next several weeks. So over the next couple of months, since we saw this intermediate cycle low in dollar, in either this has been the intermediate cycle low or this has been the intermediate cycle low. In either case, the intermediate cycle low took place somewhere at the end of January and early or second half of February 2018. And since then, the US dollar has been sort of generally trending upwards. Actually, we cannot really say that. US dollar has been doing nothing for over a month. However, compared to where it was in early February, we are much higher. So generalizing, I would say that US dollar has been trending upwards for the last couple of months, and these intermediate cycles in the US dollar generally last for about half a year. Although, of course, sometimes there are some exceptions. The previous cycle lasted from early September to middle of February. That's nearly half a year, and the cycle before that was a strange one, lasting for very long. Basically, if this cycle continues for half a year as usual, then nearly half of the cycle has already passed, and we don't have that much strength left in the dollar since it's not far from the middle range and then the declining phase of this intermediate cycle. For that reason, I don't think dollar is going to slice easily enough through this 200-day moving average. And actually, what happened on Friday, we saw that dollar has tagged the 200-day moving average and reversed after that. So we have a reversal candle which might turn out to be the top for this intermediate cycle in dollar. Although on the other hand, there is a chance that dollar continues for a short while because, as we said, the declining phase of this intermediate cycle is not that far off. So one thing that might happen to the US dollar is it's going to bounce down from this 200-day moving average, bounce around between 100-day and 200-day moving average, doing nothing as it has been doing all through February and March. And after that, finally break down, and I expect it going somewhere between 86 and 87 by the next intermediate cycle low, which will happen sometime in the second half of summer. So this is one of the possibilities. Another possibility is for the dollar to break above the 200-day moving average slightly, giving us some sort of a bull trap, and then in some sort of a fashion generally slide down, as I said, into the intermediate cycle low in the second half of summer, near the end of summer. So what does it tell us in relation to our gold price forecast? Well, gold has been moving down over the last couple of weeks. We saw this sort of top near 1366 a couple of weeks ago. At the moment, on Friday, actually not at the moment, gold closed at about 1324. And because there is a chance that dollar might give us a bull trap, that dollar might continue going up for another probably a week or two, or at least several days, then there is the same chance here, just in the opposite direction. There is a chance that gold might continue going down, and especially into this Fed meeting in the second half of May, on the 21st of May. So one of the possibilities for gold is to continue its declining phase of this intermediate cycle, reach this 200-day moving average, maybe break slightly below that, giving us a bear trap in gold and then shoot up with the Fed rate hike, as it has been doing over the last couple of years already. So that is what I expect is going to happen to gold. However, there is a chance, of course, there is a chance that gold is not going to go that low. Generally, with the declining phases of the intermediate cycles, what we've seen over the last couple of years, and we've talked about that in some of my previous videos, is the shorter cycles within the intermediate half-a-year cycles should give us a lower low. That sort of shows us that there is a chance that the intermediate cycle low has actually took place. The lowest that we see within this intermediate cycle after the initial rally is around 1300. So a clear indication of an intermediate cycle low would be when gold breaks below 1300. I don't think it's going to break far below 1300. There is a support zone over here. 1295, 1290, 1280 are all good sort of general levels for an intermediate cycle low that I would sort of foresee as the most likely one for gold. However, in this case, there is a chance we might not see that much of an intermediate cycle decline, and there is a chance we might not even see a lower low for gold. The reasons for that is, as I said, the dollar, if it doesn't go anywhere higher above this 200-day moving average, and if it only ends up going lower from here, from this resistance zone, then there is a chance gold is sort of giving us a low where it is at the 100-day moving average. So there is a chance, which I think is less likely, it is less likely, that gold is giving us an intermediate cycle low at the moment. We might see some sort of a rally corresponding to a decline in the dollar down to its 100-day moving average. Then we might see some sort of a short-term decline in gold as the Fed meeting comes close on the 21st of May. And then we might see a continuation in the rally in gold. So these two possibilities is what I expect for gold. And I think first, seeing a decline going down to 1300 is more likely with gold. So what's going to be our strategy? The strategy that I'm going to employ is, well, first of all, I'm going to see what's going to happen to gold on Monday. If it continues down from where it is, I'm going to wait for a while. I'm going to wait and see what's going to happen in future. If gold all of a sudden comes back to this 50-day moving average and tries to peek its head above it, I will consider putting some long positions with, say, about a third of the capital allocated to gold. And I would keep the other 2/3 in case if gold does give us a more recognizable intermediate cycle low. So that would be my strategy. Something similar with the gold miners. So what do we see on the gold miners chart is quite interesting, because over the last what is that? That's like a year and a half or so. Gold miners have just been sort of oscillating within this trading range between 21 or so on the GDX, 21 or 22 on the lower part of this range, and about 25 or slightly higher on the higher part of this range. And what we see more recently is that GDX has tagged this lower part of this range a few weeks ago, several weeks ago, and is now generally trending higher. Does that mean that GDX is going to continue trading higher until it reaches the upper part of this range? I'm not sure about that. There were cases previously within this same trading range when GDX had tagged the lower part of it, seemed to trend higher, only reached to sort of the middle range of that level, and had to tag this lower part again with the intermediate cycle low in gold. So there is a small chance that this trend is going to continue in GDX. However, as I said, what I expect is a decline in gold and a decline in GDX down to 22 or so on within this range. And if that happens, that's where I'm going to enter some long positions. In addition, a comment from a subscriber recently suggested looking at some specific miners, and I am going to do that. Thanks for comments. I am always interested in your opinion. So, by the way, hit the like button under this video and tell me your opinion about what's going to happen to gold over the next several weeks. How do you guys think? Anyway, in response to that comment, I've had a look at a few miners that make up a big proportion of GDX, and an interesting one was Gold Corp, because compared to Newmont and another one I've looked at, I'm not going to switch from this chart at the moment, but basically within the top 3 or 4 miners within GDX, Gold Corp had the largest provable reserves compared to its market cap. So I might have a look at buying some of Gold Corp. I will think about that. So for now, that's all I wanted to say. Hit the like button, subscribe to the channel if you haven't, and I wish you all a nice day. Thanks for your attention.